some look after first home buyers a little bit better, and it's your job to find the right fit for the client.
Yeah, correct. And look, everyone, if in any given street, in any given suburb, everyone is different. Some people are self-employed, some people are salaried, some people have no children, some people have 3 children. So every profile of every client is quite different, and then matching their profile to what they actually want to do is really my role. Quite often as a broker, you're a solution. You provide solutions to issues, whether it's self-employed, the self-employed applicants have their own challenges in a way because of the nature of being self-employed. So we've been able to provide a lot of success in that area with self-employed clients, where banks may have rejected them. And look, a rejection at a bank is, as far as I'm concerned, is an opportunity because everyone can get a loan. I've got no doubt about that, or there is a solution, a finance solution for everyone. As I said, our role really is to just try and line up that applicant's particular profile, that applicant's particular position, and more importantly, clearly understand what their objective is, because my role is to get the finance to achieve that objective.
Awesome, fantastic. All right, Dave, and I guess 2 more things. I'm going to do another series later on about investing in superannuation and how to best achieve that, which I know you can help with. So we'll touch on that one at greater length next time. But for today, what about how often should you look at getting your mortgage, I say give it a health check, right? So obviously if you've had the same product for 10 years, it's probably not doing you as many favours as a new product that's in the market today. How often should someone reach out to a broker and say, hey, can you give my mortgage a health check?
Yeah, that's a very good question as well. But look, timeline probably every 2, maybe 3 years, depending on your situation. I've been in the finance industry for 30 years. I've been broking now for 11. I probably haven't seen as much change in the industry for the last 12 months, 18 months. There's a lot of compliance changes. The government's put a lot of regulation on the lenders to tighten up, particularly in the investment sector, particularly in the interest-only loans. And only this week there was stories in the media where there's a concern out there where people currently have home loans with interest-only repayments, and it's going to hurt them when they come to review those loans. So every 2 years is probably the ideal period, but even now it's critical that you just have a look at what your loans are and what whether they're principal interest only, because it may come back to bite you if you're not taking notice of what conditions of your loans are and the type of repayments and some of the structures that some of the banks have on them. So look, we do health checks. We'll write out to our clients every 2 years. We have a mechanism in the office where a software that tells us when someone's fixed rate period's coming up, for instance. So if someone's taken a 3-year fixed rate period, at the end of the 3 years, we will get a report the month prior to that date coming due, and we'll contact the client and tell them that we probably need to sit down and just review before that fixed rate comes up. It may still be appropriate to leave it fixed. It may be appropriate to move it over to variable, interest only, whatever. Again, and the other thing too, there's 2 issues with that question. There's 2 things that change in a transaction. The lenders change their policies, and more so in the last 18 months if you needed a broker than ever before, because it's a minefield out there, and my role as a broker is to navigate through those credit policies and again ensure that we're not putting an application up to a lender that won't do the loan, saving you time. But the other side of the coin is it's the client's profile changes. In 3 years, people get married,
they have kids.
People get unmarried, they have children, they change jobs, they change industries. So all those things affect your borrowing capacity and your ability to service that loan. So we tend to keep a very close eye on the clients in terms of their profiling and what's happening in their life, and also what is happening in the industry from a lender and a regulatory point of view.
All right. Fantastic. Well, guys, I think we're going to wrap episode number 1 up there. If you'd like any more information on David or Victory Finance Group, please don't hesitate to contact me here at Wiseberry, or contact David at Victory Finance Group. Stay tuned at the end of this video because David's contact details will be there, so you can contact him directly. Other than that, guys, I hope this has been useful for you. Stay tuned to the rest of the series that will be coming shortly. See you at the next Open Home.